Welcome to lesson number 8 of Fundamental Accounting, ACC 100. Today we will take a look at the cash flow statement. I'm going to do this without a script since I seem to have deleted it, but we'll follow the flow of the chapter so that you can read it with some understanding. Cash flows fall into three categories depending on the type of activity. Operating cash flows or operating activities are the normal cash flows from revenues and expenses. This would also include interest coming in and interest being paid out as well. Operating activities, the second would be from investing activities, and this includes the purchase and disposal of long-term assets, plant, equipment, land, those sorts of things. And the last category is financial transactions, which includes any borrowing, repayment of loans, long-term and short-term, as well as adjustments to the stockholders' equity account, including retained earnings, dividends, and so forth. So this format then is the way in which the cash flow statement is presented, beginning with the operating income, operating inflows and outflows, the investing, and last of all, the financing. These activities then are discussed at some length in the book, and we also must include in here non-cash financing activities. Firms sometimes will exchange stock for large assets, and when this takes place, there is no cash flow, but the Financial Accounting Standards Board, FASB, requires that these be disclosed in a separate statement at the end of the cash flow statement if they are material. And as you know from our previous examination of that concept, it means enough money to be significant to the operation of the firm. We next turn to preparation of the cash flows, and we take a look at two methods for doing so. One is called the direct method, and the other is called the indirect method. We take up the indirect method first because it is actually simpler to do and is the more popular of the two. We must reconcile the differences between the accrual system and the cash flow system using the indirect method. And the text goes into a number of reconciliations to be done with the various types of income and expense accounts, how those are handled. We next learn how to prepare the financial activities cash flow statement using the direct method. It's important to note at this point that the operating cash flows are treated the same under either indirect or direct accounting methods. So they're treated only once at the beginning. When we get to the direct method, we're now going to cover only the last two, the investing and financial cash flows. And the text then goes into how those are prepared. Those sections are prepared, and it presents at the end a rules-based system that again makes the process a little bit easier, although it doesn't aid in the understanding. So next we look at preparing the non-cash investing and financing activities for the direct method. And again, the process is essentially the same. The text then turns to a discussion of what they call real-life data. And this is the fact that investors place a lot of value on the cash flow statement. It is used practically much more than the financial statements to determine the viability of the firm and its potential future profitability as a stock investment. The fact the FASB specifically forbids or prohibits using cash flow per share in the financial statements. This information is valuable enough that there's a separate company called the Value Line financial analysis or investment survey put out by the Value Line people that actually charges for this information. And the fact that many hundreds of thousands of subscribers find this information worth purchasing is significant. So at the very end of the chapter, the operating income and cash flow from operations are contrasted for 6 different firms over a period from 2003 to 2008, and a discussion is presented in some depth, illustrating the importance and significance of these differences. There are some activities to complete at the end. In class, we'll discuss whether we can shorten that list slightly, perhaps by skipping the comprehensive problem and doing just several of the separate exercises, and that would suit us fine. Well, congratulations, you have completed at this point, or you will have completed your introductory course in accounting. Naturally, this is only the beginning. If you're going to pursue business, I highly recommend that you take a companion class, Accounting 200, which is managerial accounting. And this class will give you an idea of how the accounting records and information and analysis are used by the internal management on a day-to-day, even hour-to-hour basis. These are provided by the same accountants that do the financial records, but recognize that the data is used differently for annual reports than it is for operating and control type activities by management. This will complete your understanding of the use of accounting in the business setting, and from there you can take more advanced courses if you intend to major in accounting. I would suggest it's not a bad choice. Well, talk to you soon and see you in class. Bye-bye.